Well, good evening, ladies and gentlemen. I hope you're all very well. Evening, everybody, and thank you for joining us this evening. This is our third webinar that we're running with our different speakers, and we're going to be doing a number of webinars going forward, particularly investing in offshore markets. And tonight, we're going to be doing particularly how to invest in the United States and also how to get 10 and 30% growth by investing in not only in the US markets, but also in other overseas markets. So our guest this evening is Scott Picken. I think many of you have been exposed to Scott at some time. I've certainly been working with Scott a number of years. I think it's almost over 7 years already in the business, and I certainly rate Scott as certainly one of the top it's international experts in investing in offshore property. And so I think Scott makes it his business to stay close and to whichever market he operates in, and in particular now the US, where there's just so much happening and so much opportunity. That's going to be the subject tonight. So yeah, just a little bit about where I got involved with Scott. I mean, Scott himself has been operating in the Australian markets, in the UK markets, and I think it was in 2010, end of 2010, beginning of 2011, he went there to the US himself to investigate opportunities for South Africans to invest in the US market, and came back, rather dejected because there weren't the right partners in the business. And then we decided, Scott got together and he said, well, look, Neale, let's go and investigate the market together, maybe from an editorial perspective, from Real Estate Investor magazine. Maybe there's some opportunities over there. And collectively, I went with Scott and also Brendan Brown at that particular time, and we investigated the US market in 2012. And to my surprise, we went to, I think it was 12 or 13 cities in about 18 days. And we really came back with some incredible data and information, and just so much intelligence on the US market, and that's where it all started. And now we're going to say, well, why are we here tonight? Well, I think we're here tonight to uncover the opportunities today, and with us we've got Scott. And Scott, are you there, Scott?
Yeah, no, I'm here. Looking forward to sharing it with everyone.
Yeah, and just for everybody, just so you know, Scott has just written a book on property going global as well. So he's also become an author. So he's becoming a real expert in this particular
Neil,
area.
does that mean you finally will listen to me?
Well, everybody else will listen to you as well, Scott. That's the wonderful thing. So I think I was one of the people that actually initiated you to actually write the book,
No, but
because really you had so
you
much
told
knowledge.
me you told me
Yeah.
5 years ago I need to write a book. It only took me 5 years to do it.
Well done, Scott. I think the fact that you did it. So welcome on the show, Scott. And I think, I mean, we're pretty excited. And obviously there's this also the US bias trip that you're going to be talking about a little bit later. But today we're going to be dealing with a number of questions. And maybe, Scott, you want to do a whole introduction, and maybe should I fire away with the first question in terms of the global wealth index?
Let's just do a quick introduction just to get everyone. I'm not sure how many people have actually used a webinar before, but there's a little box up in the right-hand corner that you can type questions in. So if you've got any questions, it would be interesting just to know where everyone is. So if you wouldn't mind just typing in where you actually are, if you're in Cape Town or Joburg or Durban or somewhere overseas. I'm actually sitting in Knysna with the most beautiful evening, looking out at the view over the lagoon. And I know, Neil, you're in Cape Town, which I love most about technology now. We
Yeah.
can sit at the comfort of our home and share with so many people about what we're doing. So yeah, if people could just type away, it would be really useful. I do believe that it's very important to pay attention in terms of what it is we're doing, and the information we're sharing, because really, from my perspective, and I'm sure, Neil, you'll agree with me. I know that you've followed a lot of the people around the world in terms of the way to get results, and it's about paying attention and
Absolutely.
being involved. You can't be sitting trying to do emails on Facebook and watch TV and hear what we're doing. So I think that's quite important. So, but yeah, no, look, that's all from my side. I think it's pretty important that we crack on because there's a lot to share tonight. I would say one thing. I've had a bit of feedback from people before, and I think Neale, you even said it to me. Sometimes I get really excited
Absolutely.
and I talk too fast. There's so much to share in such a little time. So if I am talking too fast, just let me know. I'm very passionate about what we do, and I have a lot of fun with Neale. And as he said, we went over in April last year, and really our eyes were open to an opportunity. And since then, we've been trying to share it with people. And I know Neale's coming back with us now at the end of October. And I can't wait for the opportunity to show him how much has changed in literally a very short space of time since he was last there. But thank you, Neale. It's
Yeah.
great to be online with you, and it's always an honor and a privilege
Yeah.
to share time. And I hope that
Yeah.
we can share as much value as possible with people.
Absolutely. Absolutely. And Scott, I think, has also become, because of his expertise in this particular market, we've actually asked him to write particular articles in particular areas. And the one that we asked you to write recently about, Scott, was this whole global wealth index. And maybe as a starter, you want to maybe just tell us a little bit about that global wealth index. Do you want to maybe just elaborate a little bit
Yeah,
on that?
perfect. I mean, I think really, a lot of people say, "Oh, why are we here today? Why do we do what we do?" And it all started well a long time ago. But recently, I actually saw a quote by Nelson Mandela, which said, "Money won't create success; the freedom to make it will." And really, I actually think it's quite a lot more than that. I think you've got to take it to a higher level because it's all about global wealth. And like Neil's just mentioned, it's about creating global wealth. And if you know how to create global wealth, it'll ultimately give you the freedom of whatever choice you want. So no matter where you want to go on holiday, no matter where you want to send your kid to school, no matter where you want to send your kids to university, and to be honest, no matter where you want to live. And so what we did is we sat back and we said, well, what is CPI? And this is where, again, I'd like you to interact and just think about it. What does CPI actually stand for? Because, you've got CPI, and CPI is there, and it's an indication, but we don't have any type of indicator. So before I keep going, I'm just going to see if people are participating here. I can see a couple of people are saying getting the answer right, so that's pretty cool. For the rest of you that are playing on Facebook, Godfrey, I can see you're not paying attention. That's the beauty of technology, dude. is and there's a couple of others. Mark's not paying attention. Adrian's not paying attention. But yeah, I can see people are putting it through. So you're very right. It's actually consumer price index, and the way that the consumer price index is actually calculated every month is that it's actually a basket of goods. It's 20 goods. And what they do is they take those 20 goods and they work out the price. So what Neale was talking about is the global wealth index. And really, from our perspective, what we thought about 2 months ago is we said, listen, it's quite important as South Africans to work out what our global wealth index is. Like, how much is our in terms of creating global wealth, and how much in terms of the rand and what's happening with the rand, how much is it affecting our global wealth? And so we came up with a global wealth index. And really, some of you that were at Neale's Wealth Masterclass, which I would highly recommend, it was fantastic. You might have seen this because it was the first time I presented it live. And also, as Neale said, we actually wrote about it in his magazine this month because it's very new. We literally did it for the new book, which has just been released. So just a quick thing, and I really think it's worth you trying to think about these answers. But in 1983, how much do you think it would cost for a family to go on holiday to Disney World? So a mom and a dad and two kids for a week in US dollars. How much do you think it would cost to actually go to Disney World? Now, the reason that we use Disney World is that most families around the world would love to take, their family over to Disney World on a holiday. The next one we use is a French ski resort. It's Val d'Isère. I've had the privilege of skiing in a lot of France and Austria, and Val d'Isère is one of my favorites. Going to a private school, Churchy in Brisbane, is a bit like St. Stithians or Bishops. Whether you like them or hate them is irrelevant. They're still one of the better schools, and therefore, you want to be able to have the choice if you were to go to Brisbane. Harvard, again, whether your son or daughter wants to go to Harvard, it's irrelevant. But whether they came to you and said, Mom, Dad, I really want to go to Harvard, and you being able to say, sure, no problem, versus, I'm sorry, we can't afford it, is a very different story. And then lastly, I don't really care where you want to live, but whether it's, I love living in South Africa, I'm absolutely passionate about it, but I certainly want to have the freedom and the choice to live wherever I want. And so, how much would it cost to buy your way into Australia or to America? So I can see some people, and I know, thank you for participating, but actually to go in 1983 to Disney World would have cost you $715. Now, as a matter of interest, in 1983, if you had £1, how many rands would you actually be able to get? So, do you think the rand was stronger or weaker than the pound? How many rands would you get in 1983 if you had £1? And interestingly enough, it's 82 cents. 82 cents. So the rand was actually stronger than the pound in 1983. In 1993, if you had $1, how many rands would you get? So in 1993, if you had $1, how many rands would you get? Hano's saying 5. Everyone else is thinking about it. But interestingly enough, it's 3 rand and 7 cents. So 1993, 20 years ago, you got 3 rand and 7 cents for $1. Today it's currently sitting at 9.99. I'm not sure if it's changed today, actually. I saw that this morning. Then what about this one over here, which is sending your kid to a private school? So it's not a boarding school, it's just a day scholar school, but it's the annual tuition. How much do you think it would cost to send your kid to a good private school in Brisbane? And the answer is $39,356. So it's roughly $40,000 or just short of 400,000 Rand for a year. And the final thing I want to ask you is if you're going to invest in Australia, or not, sorry, invest in Australia, go and live in Australia. Now, it's got quite a lot more expensive than it used to be even a couple of years ago, but you physically can buy your way into Australia and you can buy your way into America. And if you want to buy your way into Australia now, it costs you 1.5 million Aussie dollars. Now, Neale, the thing that I find fascinating, and I mean, you would have seen this at your Wealth Masterclass, but I know that you're dealing with 100 things on that day. I'm not sure if this really sunk in. But if you take the last 30 years, and if you take a trend for the last 30 years, do you know that our global wealth in South Africa has devalued by 77% every single year?
Well, so the rand devalues, Scott, so what now? I mean, this is the big question, because what do people do? Because you've demonstrated to us from a numbers perspective, what do people do?
Well, I mean, look, I'll get on to some of the answers. There's a couple of people here asking in terms of why is this happening? And funny enough, Leon Martins, who I know you know well, actually challenged me and said, well, that's the straight line graph. What is it actually on a compound per year? And that devaluation or degradation, if you want to call it, is 25.5% year on year for the last 30 years. Now, just to answer the questions in terms of why it's happened quickly, just before I get into the answer as to how to solve it, is if you look at from 1990 to today, the rand against the dollar has gone up and it's gone down and it's bounced around. But the long-term graph has a devaluation of 5.6% every year for the last 23 years. And what is really interesting and quite scary, actually, is if you take the last 30 years, it's actually over 6% every single year. And we work with one of the experts. I know, Neale, have you actually met James before?
I haven't met him. I've heard his work online and
we should actually.
So I've been exposed to it.
I should hook the two of you up because he'd actually do a really good piece for your magazine. But James is an expert in terms of where the currency and where the rand is going. He uses a technology and a formula that's very similar to weather tracking. So in the same way as the weatherman never gets it 100% right, they can tell you whether tomorrow is going to be sunny or raining. And what's quite interesting is that since 2005, he's had an accuracy which is more than 80% since 2005. And considering how volatile the rand's been, that's fairly incredible. And where we stand at the moment is that if, he basically says that the rand is in quite a good position right now to be buying the dollar. It's quite strong. It's going to, over the next couple of weeks and then the next couple of months, it's going to start to weaken. And in the next couple of years, we're going to be sitting at between 14 to 21 to the US dollar. Now, that's interesting because I sat with him and I said, what is the probability of that happening? And he said it's more than 90%. Now, some people are sitting there thinking that this guy's talking rubbish. It was interesting. We did a live event, and I know, Neale, you were involved in our Johannesburg event, and that's the only one he couldn't be involved in because he can't work. It's something to do with religion. He can't work on a Saturday. But he was involved in all the other events in Cape Town and Cape Town, Pretoria, and Durban. But at that exact event, and I mean, Neale, you remember in Johannesburg, I think there were about 100 people there. Actually, 202 people attended all those events. And he said to us within 3 months, now the rand was sitting at 888 at the time, and he said within 3 months it'll breach 10 rand, it'll be over 10 rand to the US dollar. And you know that of 202 people, 22 of them took action and 180 didn't. And I asked him, I said, what's the probability? And he said 90%. And we all know that actually it was a little bit less than 3 months that the Rand went to 1030. And it's really scary when people get told, with quite a high level of accuracy from someone that has some serious track record in terms of, being good at this, and they don't take action. I mean, one lady, quite funny enough, she was actually at the event, Neale, in Johannesburg that you were at. She put 4 million Rand into Sable's foreign trading account, and then got cold feet and pulled out. And in the space of just about literally 10 days to 2 weeks, she lost over 400,000 Rand. The Rand was at 888 or something, and now it's sitting at 10 Rand to the dollar. So
what is his prediction for the way forward there, Scott? What's James's prediction say in about a year, 2 years, 3 years?
Well, if you look at the target area, he says we've got about a 90% probability of being between 14 and 21 to the US dollar. And so for those of you who are online tonight, if you are interested, just type in asset manager and then dash currency, and I can send you the full report. Again, Neale, I think the idea tonight is to try and share as much information and not to get into too much detail of everything. But for those that are keen, if you just type in asset manager and then currency, then we'll be able to get back to you and actually give you that full report, and you can read up. I mean, he sends out literally a daily report. Now, you asked me the question a little bit earlier, Neale, in terms of what do we do? Because it's all good and well to understand the problem, but what is the solution? And we did do a webinar about a month ago on this, where we took the last 30 years and we said, right, this is what's happened for the last 30 years. If we extrapolate these trends forward, then this gives us a good indication of where we'll be in the next 30 years. And I know you follow and have done a lot with Robert Kiyosaki. And Robert Kiyosaki actually wrote in his book that one of the easiest ways to make money is actually to follow long-term trends. And that's why these trends are so important, Neale. And, you've actually met him personally, I think, and I know he's been a lot in your magazines.
A number of times. Yeah, I have. Yeah, no, so I think he's definitely, an expert in that particular area, and he's been pretty spot on in terms of where the markets have moved as well internationally. So I think it's definitely a good indicator. So
okay. Basically, from learning from him, actually, it was for me and Hannes Dreyer, actually, it was also, if you look backwards and you take long-term trends, then you're able to extrapolate it forward. Now, interestingly enough, and you're not supposed to be able to read all these numbers on the graph, but we did quite an extensive study of 5 different scenarios, and I prefer pictures, so I'm going to show you the pictures. If you take your money, $100,000 or roughly R1 million, and you invest it now in a bank, in 30 years' time, you will have around $250,000 in net asset value. Why is it all in dollars? Well, in terms of global wealth, I'm only interested in having my wealth determined in a first world currency. If I bought a South African property, now I'd be quite interested to know your opinion here, Neale, but if you take the last 30 years in terms of the numbers, the averages, do you know that the 30-year average is 12% capital growth and 8% net yield? And I'm not sure if you're aware of that, but those are the actual 30-year averages for South African property.
No, I think you're pretty spot on.
If you extrapolate that forward, you will have a net asset value of $760,000 in 30 years. So it's about a 222% difference. A lot of our clients say to us, well, hang on, but the Rand is 10 Rand to the dollar. I think it's going to get a lot stronger. And I go, okay, cool. So what I showed them was that if they wait an entire year and the Rand does recover even to 9 Rand to the dollar, and they buy a property in a year's time, their net asset value, if they bought an American property, would be about $2 million or another 174% difference. But interesting enough, if they buy today or in the next couple of weeks when the Rand stays at 10 Rand to the dollar, but they benefit from the passive income for the next 12 months, that passive income compounded over the next 30 years actually equates to another 10% in net asset value, because you now are about $2.35 million in terms of your net asset value. And finally, a lot of our clients buy cash, and we've actually found solutions now that they can get financing. And if they get financing, their net asset value would be over $4 million. So the total in terms of the difference between leaving your money in the bank in South Africa and investing in a good American property is 1,600% based on the last 30 years in terms of the trends and forward extrapolating that over the next 30 years. The difference between a good South African property and a good American property based on the last 30 years research is 439% in terms of net asset value over the next 30 years. So to answer your question, Neale, if our global wealth is devaluing at 77% a year, if we take 30 years, that's about 2,300%. If we divide that by 439, it actually equates to 5.2 houses. So basically, although the problem seems very stark, and I'll be honest with you, the first time I saw it, it really, really worried me. But for me, when I understood this, I knew that I was on the right track, because all that you've got to do is be able to own 5.2, call it 6 assets, first world assets with a first world income in good property markets, and you would have negated, or I don't know if that's the right word, but you would have taken care of the problem in terms of the global wealth index and the degradation of our global wealth. So that really, Neale, is the solution. And look, I'm sure there's other solutions, but that's the one that I understand, and it's certainly the one that I passionately have been following. And that's why we do what we do.
Scott, I know you're going to talk about the whole US market, and you're going to go into great detail. And when we went last April 2012, I mean, the market today has recovered remarkably. I mean, it has picked up in quite a big way. Some people are asking the question, am I too late again? Then I want to throw another one into the mix as well. If we're going to be talking about the US market and the markets in general, I mean, you've seen all over the news right now that the United States is in shutdown. The government is in shutdown, and they're talking about accumulating more debt and sort of going back to where they were. And I know you've got an opinion on it, and I know you've got a good opinion on it. But maybe just to set the scene, just into the whole US market. First of all, the recovery, is it too late? And maybe what's happening over the last 2 days in terms of that US market shutdown. Do you want to maybe just comment on some of that?
No, perfect. Before I do, Neale, what I'm interested in is I just want to know quickly, I just want to run a quick poll and see how many people know kind of who we are and what we do. Whether this is their first webinar, whether they've been following us for 6 months, 12 months, or 24 months. I'll tell you why it's important is because I want to answer those questions for you. But I think it's quite important for people just to get a perspective of where we're coming from in terms of our experience. Because, if you go and see a doctor and you know that they've got 30 years worth of experience and they're a specialist, you're going to be a lot more akin to listen to them than if you meet someone who's fresh out of varsity with no experience. So I just want to see quickly where we stand with people in terms of their understanding of you and I and kind of where we're at and whether they've been following us for a while. So I can see 50% of people have voted. Come on, guys, let's participate here. It'll be better for you because obviously then we can focus on what is going to work for you. So, okay, and also it's nice to participate and be part of the action. Neale, this is one of the things I enjoy doing on a webinar because it sees we can see who's actually concentrating and who's not. So I'll share the results there quickly. It's pretty interesting. 83% of people, this is their first webinar, and 17% of people have been following us for 12 months. So it's pretty interesting in terms of So what I'm going to do, Neale, just before I answer your question on America, I'd like to just share a little bit about us and our experience because I think it's pretty important before people take what we've got to say. So what I'd like to show
so let's add to that, Scott. I think because there's a lot of newbies on there, it probably makes sense to talk about IPS because there's obviously a lot of people that don't know about it. So I think it's a pretty good idea. So
cool.
Take it away.
Something feedback I had at your Wealth Masterclass in Johannesburg, funny enough, was, and it's the first time I've ever done it, someone came along to me and asked me some research, and then after a while they said, well, who are you and how do you know about this? And I told them a bit about my history, and he said, well, you should have told us that at the Wealth Masterclass when you were on stage. And sometimes you take this stuff for granted. So anyway, so I just want to show you a couple of quick pictures. This was actually, I went to London at the age of 21. I've always wanted to earn foreign currency and to have foreign assets and foreign companies. And we actually bought our first property back in Rondebosch in Cape Town, very near the Keg. You'll know it pretty well, Neale, in terms of the location in Rondebosch. And it was a 5-bedroom house.
Yeah.
It had R4 zoning, and our intention was to buy it and to build a student accommodation. Interestingly enough, we were 22 when we bought it, and while it was going through all the planning and the rezoning and everything else, we effectively put tenants in it. And I got my brother to be the management agent, and it was pretty easy while the guys were paying. But when they stopped paying, I was paying my brother a case of beer a month, which is always a good way to pay a student. But when they stopped paying, I phoned my brother and said, can you sort it out? Because there's nothing I could do. I was in London. And he said, but I'm a doctor, not a debt collector. And that was the first time I realized how important it was to have a property management person. And Heino actually is talking about property management. And Heino, I'm going to talk a lot. I hope I'm pronouncing your name right, but I'm going to talk a lot about property management and the importance of property management when it comes to international property investing. But we actually developed that house into 6 townhouses. It was the first development we did when we were 22. When we were 24, we bought our first house in London. It was actually this house here in Wimbledon. You can see it here. And it was actually a council house. It was on a beautiful park. A lot of people in England at the time, and probably now today, wanted to buy period houses, and they were probably 50 or 60,000 pounds more at the time, which meant you were getting a lower yield by probably 2 or 3%. And interesting enough, the professional sharers, mainly the South Africans, didn't care about that. All they were interested in was a power shower, a DSTV, and a good internet connection. They were far more interested about the interior of the house. But something like this, in terms of this park, worked like a charm. And we actually spent £20,000. We put on a conservatory, and by doing that, we literally changed it from a 5-bedroom house from a 3-bedroom house into a 5-bedroom house. Now in London, I'm not sure if many people are aware of this, but every bedroom you've got becomes an income-producing asset. So that immediately helped us create a passive income of over £1,000 a month after all expenses, including our mortgage. And a lot of my mates, we bought this house just after September the 11th, and a lot of my mates said to me, yeah, but England's going to war with Afghanistan, and oil prices are going to go up, and interest rates are going to go up, inflation's going to go up, and thus interest rates are going to go up. And it sounds very much about the type of thing that you've just asked me, Neale, in terms of the questions.
Yes.
What about quantitative easing?
Absolutely.
What about the American meltdown? Blah 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 blah. And for me, and I won't dismiss it as casually as that, but I will go into a little bit more detail just now. But for me, I learned a very, very important lesson. And funny enough, I learned this lesson from Ian Fife, and I know you were a good friend of Ian Fife as well, the ex-editor of the Financial Mail, who unfortunately has passed away. He said, so many people have analysis paralysis, and they get so caught up in what's happening with the world economy and the global economy and everything else. And sometimes it's just easy. You just get a little bit more simple. You look at a simple little house like this in Wimbledon, a 3-bedroom, you can turn it into a 5-bedroom. You can spend £20,000 putting a conservatory on. You've got £1,000 passive income. And the one lesson I've learned in life, if you go after capital growth, it's only a matter of time until you take a hiding. But if you go after income, then you not only survive in tough times, but you thrive. And I learned this at the age of 24 when we bought this first house in London. And it really has paved a way to give me a lot more confidence to not get so caught up in the big macro pictures and actually get down into the devil in the detail. And what are the specific numbers of this property? And am I going to get the income on this property? And how sustainable is the property management on this property? And by doing things like that, it allowed me to have the confidence to do further international investment. There's one last story that I just want to show people. And this was actually a house that myself and one of my best friends built in Atlantic Beach. It's on the end of the first hole. It's right up on the hill. It's got magnificent views of the sea and of Table Mountain. It was our dream home, 4-bedroom home. And this is when I learned the essential need to have a best-of-breed partners. My background is construction. I studied construction management in varsity. I did construction IT at London University. I worked for an Irish developer for 5 years, and all I've ever done is property and development. And yet, long distance, I employed a project manager to look after this project. Long distance, and the project was 50% over budget and 8 months late. And unfortunately, in 2007, I ended up selling the property because the quality and the finishes were just so terrible. And I learned a very big lesson there and then, and we made a promise that we will never try and do something on our own. And I'm not sure if you've heard the interview I did actually with George Ross, Neale, but I asked him, and I'll explain a little bit about George Ross, but he's Donald Trump's right-hand man. I asked him about international investing. And he said, if you don't have the right partners on the ground, it's not a case of if you'll fail, it's a case of when you'll fail. And he was quite adamant and quite blatant. And I know you have you interviewed him now. I know you were going to interview him.
Yes, I have. No, no, he's our master investor, in fact, in our October edition.
Oh,
So I
fantastic.
did have an interview with George, and there's a lot of insight there. I tell you what, he's a hugely influential guy, and
He's a
he's got a
fantastic character. I mean, 84
yeah,
years old.
yeah,
He's been in the game more than 50 years. He knows more about property than anyone I've ever met. And it was interesting,
absolutely,
the mindset of our business is that we can only work with the right partners on the ground, and we're only as good as our partners on the ground. And it was interesting how much him and the Trump Foundation endorsed that. But also, just to be clear, some people think it's all just residential. My business partner Henny and I have done millions, or actually tens of millions of dollars worth of commercial investment, also in Australia. And recently we've gone into America, and I'm really looking forward, Neale, to showing you some of the commercial stuff. But currently we're putting up an
yeah,
office park worth $16 million. We've got a cash net yield of 15%. We've got financing at 50%. And we've got an IRR of 23%. So from a spectrum of experience, we really have been through the different molds. And, we've helped over 2,000 people invest internationally to a value of 1.7 billion. We only do international investment. We've got offices in South Africa, Australia, the UK, and America. We spend millions on research. I know, Neale, you're coming with us. You came on one of the first trips, and now you're coming again, which is awesome. We've currently spent
yeah,
2.7 million rand on direct expenses, flights, accommodation, paying for research on the ground in America to understand the markets and where we're at. We've got the best of breed partners on the ground. We've got a sophisticated IT platform so that we've got efficiency and transparency both for ourselves and for our clients. And then one of the things that I think really that I pride myself, that I think we differentiate ourselves on, is our private banking service. And that's very much the after sales. A lot of people talk about the buying the property. We say that's about 20%. Actually, the whole after sales is about 80%. The management, the maintenance, the tax, the structuring, the compliance. And our private banking service really looks after you from beginning to end. And then lastly is the off-market opportunities. And you're going to actually be privileged, Neale, because you're coming. I was talking to John Chin a couple of days ago, and he's just uncovered 8 brand new opportunities in one of the markets we're going to. And the people that are coming on the buyer's trip are going to be the first to actually get access to that. That includes people in America and people globally. So, and
yeah,
RJ was actually at the auctions, and I know you know RJ, on Tuesday,
yes,
and he's got access to some great new stock that he's managed to get. So, really it's about finding stuff that's not on the internet, it's not available to people, and by having, by knowing people like Neale and by following his magazine, you get invited into the inner circle and you get behind the curtain to find out what's going on. I don't really care too much about qualifications, but we do have the honors degree and the master's degree and the CRS, which stands for Certified Residential Specialist. It's the highest qualification you can get out of the US. And we're also a member of the AIPP, which is the Association of International Property Professionals. And it's basically an organization run out of London. And we were invited, the first South African company to be invited onto their panel, and also won an award in 2008 for the most professional company out of Africa. But, as I say to you, Neale, always, and you have asked me the question about America, and I do want to get into America, I don't really think the qualifications is anything in terms of what has happened. And, you came over with me in April last year. It was you, me, and Brendan, as you said. And
yeah,
we had a great trip. And I think we really got quite excited at that point because, 2 things happened. We realized there was really, really good value in the properties. And then also we really liked the quality of the partners that could therefore deliver the income. And, just to follow up on what you said in terms of a couple of the questions you asked, in the last 17 months since you were there, we've acquired 251 properties to a value of $25.7 million. We've got capital growth anywhere in the region of 10 to 30%, depending on which markets we've actually invested in and the timing of when we invested. I'm less interested in the capital growth and much more interested in the net yield. We've experienced 8 to 15% net yields on the properties that we've actually invested in. We've done 5 buyers trips. So where we started out, Neale, myself, and Brendan, it actually became a necessity because a lot of people kept saying, well, you're going over and you're buying properties. Can we come with you? And so we started doing these buyers trips, and I'll explain a little bit about those later. But a good question you asked, Neale, a lot of people think it is, have I missed the boat? And you actually asked me a little bit
yes,
earlier, and I think it's absolutely critical. And interesting enough, on our last buyers trip in July, we bought 171 properties with an IRR of over 20%. So to answer your question, you might have missed the market in certain areas, but the beauty with America is that it's so big and so scalable and so fluid that we've got great partners on the ground like John Chin, who you've met, that are constantly uncovering new opportunities. And so the more we get confidence in our partners, the more we actually investing. So it's not a case of whether people have missed the opportunity. It's a case of the current opportunity that we personally are putting our money where our mouth is and actually investing in. And that's really, where we are with America. Now, sorry, I just want to butt in quickly, in terms of where you are, Neale. I'm going to answer your question with America in terms of the shutdown and the quantitative easing and everything else.
Just before you do that, Scott, won't you just elaborate very quickly what an IRR is? Because a lot of the people, it's the first time and maybe somebody just missed it. Just very briefly.
Okay, excellent. An IRR is a way that sophisticated investors actually try and calculate the return on investment. And in simple terms, the best way to understand an IRR is it takes the amount of capital that you actually put into an investment, it works out the growth of the investment, the net return, and takes off all the expenses, and it shows you your return on the capital you've invested over a number of years. Is that good enough, Neale?
Absolutely. And it stands for internal rate of return.
Internal rate of return. Sorry, did I not say that?
No, you didn't. I just thought I'd add that bit.
That's why you're on this call. It's above my pay grade. Anyway, so that's excellent. And Neale, I want to answer your question in terms of the bias trip and about the quantitative easing and also about the thing that the American market's shutting down.
The shutdown.
One of the reasons that we set up the bias trip is to be able to come over and to get the right information. One of the reasons I love, your magazine so much, and I think it adds so much value to your readers, is because you get the right information. There's a lot of people that could sit on the internet, and I know a lot of your competitors do this, and just get information, and they go on CNN and PR, what is it, PR Wire or whatever, and they get, the latest updates on what's happening. But it's very easy to look on the internet, but it's much better to actually go on the ground and find out what the real information is, and so, yes, there is the concern about the quantitative easing. And yes, there is the concern that 2 days ago, some of the American departments got shut down. But I can tell you, in the last 17 months, there's been about 5 of those shocks. If you remember, on the 1st of August last year, if they didn't sort stuff out, the whole world was going to come to an end because America's debt was going to be run out. And on the 31st of December, there was another one that they had to sort out by the 1st of January. And my answer to you, Neale, is that the people that come on the bias trip with us will actually get on the ground. They'll have a chance to talk to the taxi drivers, talk to the Wall Street bankers, talk to the people on the ground. Stop worrying about what is on the internet and what you're getting in some Twitter feed or on some news feed. If you actually come on the ground, you get the real information. You really get to experience and feel what's happening. And what I honor and respect about you, Neale, is that you're coming over so that you can get the real facts, because 2 years ago, you and I were sitting there going, well, is there an opportunity in America? Is there not? And to be fair, I remember it well. It was in Forries in Cape Town. And Brendan was like, no, guys, there's a real opportunity. I went to America in September last year, and all the stuff you're reading is rubbish. You need to come over. And we were like, and it was over a few beers, I'm not going to lie. We were like, cool, we're coming. And, that's what we did. And I would applaud anyone to do that because, I truly believe, and I'm not, again, dismissing your question, but I think if people come on the ground, they will get the real information. Now, what's my opinion on what's just happened? I'm a big believer that when there's blood on the streets, there's more opportunity. And if I come back to what's just my example with my London property, if we buy good assets in good locations with good income, if we have quantitative easing, it means that interest rates will go up. If interest rates go up, what actually happens to yields? And I'm going to ask you this, Neale, as a question.
Well, yields are going to go up.
Yields are going to go up because demand for rental property actually goes up. So that's fantastic. Okay, I'm all for quantitative easing because it'll impact my returns. I mean, as I said, in London when it all fell apart and they dropped interest rates to 0.25%, my passive income went from £1,000 per property to about £2,500 per property. I literally sit every night and when I go to bed, I say, please will the British economy be in trouble forever? Because it's just beautiful. Okay. The second part of it is you ask about the American government being shut down. Well, that's actually great because American sentiment about 3 or 4 months ago, there was a research that came out. It was on CNN that was done by one of the big research houses there. And more than 50% of Americans now believe that the property market is recovering and that, it's a good time to get involved. Now, I don't like positive sentiment because positive sentiment fuels capital growth, and that makes properties more expensive, which means I can't buy properties on good returns. So if Americans' government is having a few problems, that for me is fantastic because their sentiment will change, and therefore we will be, people, the buyers will leave the market, which will allow us to pick up even better opportunities. And again, as long as you focus, I'm not saying in the whole of America, you're focusing on areas with good fundamentals in terms of where you are, then I truly believe, like I have done in London and like we did do in Australia, it allows you to ride the storm. I must admit, I didn't do it in South Africa. I got caught up a little bit in the hype in South Africa, and I know, Neale, I think you did as well, where it was all really, really good from 2004 to 2007, and I kind of went away from the fundamentals, and I focused more on the capital growth, and I own some properties now that I'd happily give away. But for me, that's so I don't know if I've answered your question, Neale, but I feel
sure.
passionately about this, and I think that these problems actually are to our advantage because the market's recovering too quickly, and the longer it takes, the better, and the more property we can accumulate.
No, there was method in the madness because, bad news is actually good news for investors on the ground. And that's why I actually asked that question. So many people are stuck on what's happening on TV and they take that as fact and say the world is falling apart. But once you actually get out into the markets and you start talking to the real people who are playing, they love it. They love bad news because all of a sudden people want to sell stuff and, that's when good value comes along. So, so I think the more people that watch TV, the better for us investors on the ground, we're going to get that value back. So I just thought I'd put that out there because, from the inside, you mentioned about the inside just now, that's how proper investors really, really, become successful. So I think you answered it 100%, Scott. So tell us a little bit more about the trip and about the US markets, because you actually mentioned that there's, we can't just talk about the US market per se. We've got to talk about specific markets. Do you want to elaborate a little
I'll
bit
get
about
into that? Let me just finish quickly on the trip. One of the things that I love so much is that the people get the information, they come over, they meet the partners. So again, all this other stuff that we're talking about becomes irrelevant when you actually meet the people on the ground. You shake their hands, you get to understand whether you like them, you meet their teams and how authentic they are. We also, a lot of people that go over, they fly to London, they fly to Sydney, they've got 3 days, they really want to buy something, and they don't see properties that are available, they can't get inside, they don't get the information. What we do is we sit down prior to the trip, we understand, you sit with an asset manager, we understand exactly what you're trying to achieve, so that when you're over there, our partners are ready, so that you can get inside, you've got all the information, and you're able to take action. We have lots of fun. I know, Neale, you certainly know that. When we were on our last trip, we had loads of fun. And I don't believe you can work hard without having lots of fun as well. A lot of people negatively, sit and go, I'm very sophisticated and I don't want to go over and spend time with other people. I think it's the completely wrong attitude. Your success and your results are actually determined by the people you hang around with. And when you consider someone like Henny, and I know he's been one of the master investors in your magazine, Neale, he's quite a shy guy. He doesn't share a lot of the times the success, but he's worth hundreds of millions of rands. And he actually has done it by both business and property here in South Africa. He invested overseas 7 years ago in the UAE. About 4.5 years ago, he started in Australia with $4 million. He turned it into $40 million in 4 years and subsequently listed the company, and it's now worth over $200 million. That is dollars, not rands. And, I actually phoned him from, in that same trip that Neale was there, I phoned him from Times Square and I said, Neale, Henny, we're in the wrong country. Like this model that we've got in Australia really, really works, but I actually think we'll be more successful in America because it's bigger and it's more scalable and the fundamentals are more sustainable. So, you get to meet with people like that. And Henny's coming on this trip with Neale. Obviously Neale's going to be there. I should actually cross that out and say Neale's coming as a sophisticated investor. But what's great is that no matter where you are on the spectrum of sophistication, you get to learn, you get to ask questions, and if you're as sophisticated as Henny, fantastic. You get to benchmark and to ask the same sort of questions and learn. And then the last thing is because Henny is actually speaking at Mega Partnering, he's been invited as one of the VIP guests to talk about investing globally in Africa. We've actually managed to secure 10 VIP tickets. And I know, Neale, you're really excited about this with JD Fox, where he's got, literally 800 of the best property and business people in the country. And he's actually got an invited, 10 of us are going to be able to go along and spend the weekend with him. So that is why the buyer's trip for us is so exciting. And if you are interested, just type in buyer's trip and we can get back to you with all the details and also the cost and the itinerary. But Neale and I are actually going at the end of this month in terms of where we are. Now, you spoke about different properties and different properties around the world, and I've actually had the privilege of being involved with Neale for a long time, and it was actually last year at his Wealth Masterclass in September last year. I'd created a model. I'd been watching Clem Sunter for many years, and Clem Sunter, for those of you who don't know, is in the top 5 scenario planners in the world. I was actually speaking to him this morning, and he was telling me how he's now been invited all over the world to Europe and America and Australia. And he's also respected as one of the top 3 businessmen in South Africa that had the most influence on South African business in the last 30 years. And he's got a scenario planning system where he basically has 4 scenarios for the global economy and 3 scenarios for the South African economy. And I listened to this for a number of years, and I actually created a model. And funny enough, I was a bit nervous, but at Neale's event last year in September, I shared with Clem the model. Mm-hmm. And I'll never forget Neale when he came back, and he was quite impressed by what he had seen. And so we took that a bit further, and we worked with Clem on it. And what we've now created is the global property system, which is a 4-dimensional model, which allows people to take his scenario planning and take the fundamentals of property and ultimately make the right decisions based on a system and not gut feel. And currently, we speak a lot about this in the book that we've launched and that Clem has actually endorsed. And but at the moment, there's only one country, America, which is sitting in the high return, low risk quadrant. Australia is sitting in the low return, low risk. The UK is sitting between low risk and high risk. And ultimately, there's a lot of other countries that are sitting in low return, high risk in terms of where you are. And I think what's really important is that I know Neale's exactly the same. We only like to partner with the best. As I said to you, Clem literally is one of the best in the world. And that's why we've got this book, Property Going Global. And really it understands and explains the methodology of how we do it and why we do it. But to get into simple facts and numbers, and I think, Neale, when you were there in April, the prices were even cheaper. I mean, this house was probably costing $65,000 when you were there with us in April last year. But I mean, if you talk simple numbers in America at the moment, before you get into all the macro and the complicated stuff, just be simple, like that London property. You're buying this property. We bought this property in October 2012 for $85,000. The price today is about $120,000. It costs between 90 and 100 square foot to replace this property, so to rebuild this property. So if this property is 2,000 square feet, which is roughly about 200 square meters, it's going to cost about $180,000 to $200,000 to rebuild this house. So and that's without land. When we bought this in October last year, it was actually 60% below replacement value. Currently, it's about 40% below replacement value. Now, for me, if I was to compare this with, say, London, and I'm not sure if you're aware of this, Neale, but London for the last 4 months has had the highest recorded price points ever. London is the most expensive it's ever been. So if you take any type of common sense, if I'm buying something at full value versus buying something at 40% below value, and remember, we're not talking about the highs of 2007 because that is irrelevant. We're talking about replacement value, which is a great indication of intrinsic value. I mean, would you agree with me or not, or am I talking rubbish, Neale?
No, absolutely. No, look, 100%. I think, there's a number of reasons why the London market has been fueled and while it is performing. I mean, obviously a lot of Greeks and Cypriots and everything, divested out of their own country into the UK, plus a number of other countries as well. And so London is at the high, but in terms of your analogy with replacement, it makes absolute sense. I mean, there's so much value both on the capital and on the yield side that can be made in US property.
You see, I mean, for me, the important thing, and you've just mentioned it, is yield. Again, in London, I'm getting about a 2 to 3% net yield, whereas in America, I'm getting between 8 to 13%. So it doesn't make any sense to me to buy something where I'm buying it at full value with a 2 to 3% net yield when I can buy something at a 40% discount with 3 or 4 times that yield. And so in a very simple analogy, that is actually why we're investing in America right now. We've also got, and I know you got to meet Andrea at your event, we found one of the most sophisticated financing companies in America. And I'll go into that a little bit detail later, but it's really allowed people to get some fuel in terms of getting really high growth and the financing. But I'll also go into it, and you can get quite a lot more in depth. And I know I've shown you this research before, Neale, but The Economist takes the top 20 markets around the world for the last 20 years, and everything, whether it's residential or commercial, in terms of property, should be valued based on income. It's not about willing buyer, willing seller. It's not about sentiment and feel-good factors. It should be based on income. And currently, the research that came out at the end of the end of August, is that the United States is currently 12% undervalued. Interestingly enough, Australia is 24% overvalued, and Britain is 14% overvalued. Now, I know a lot of people ask me about Germany, and if we get time at the end, I'll go into Germany, because you'll actually see there Germany is 18% undervalued, and so is China. And if you want to go into those markets later, we certainly can, and discuss what we're doing and why we're doing it. But the fundamentals of what we do, and this is based on actually all the experts that Neale brings out in terms of his wealth masterclass. The economic risk is the first fundamentals, first leg of the table. And this is all based on Clem Sunter and his scenario planning. The value of the property discount, again, whether it's a share or a property, if you're buying it at full market value, whether you're buying it at a discount, will determine the risk long term. And this is taken off the Economist and its 10-year research. The third one is the property fundamentals, and this I learned from Dr. Dolf de Roos, who you had out a number of times, but he was out last September, and I think you've actually got him coming out next year as well, Neale. But
that's right, absolutely.
Dr. Dolf de Roos is the writer of Real Estate Riches, one of the most respected international investors, speakers, and authors. And he spoke a lot about population growth and how important that is. And he spoke actually about Japan and how the Japanese market went from a population went from 120 million people to 100 million. And that's why their property market for more than 20 years since it crashed has gone literally sideways. So population growth is vitally important. But also you've got to take aging demographics. So a place like Europe, you've got aging demographics. The population's getting older and older. In fact, Clem Sunter said, if you put a roof over an English village, you've got an old age home. And so that is also very, very important to take into account. So we base all that research on the IMF and their research in terms of population growth. Then supply and demand is a fundamental thing. You know, if you take London as an example, the market lost 15%. It recovered by 17% in 12 months. Why? Because supply and demand was in kilter. In Australia, the market was never really affected by the global financial crisis. Again, because supply and demand was in kilter. And it's the same with South Africa. But if you take Cyprus, Italy, Spain, Ireland, and even America, they were all oversupplied. And so what happened is the market crashed and then pretty much bumped along the bottom. But what's happened in a place like America is that there were 10 million homes oversupplied. And they've over the last 6 years, they've had the population growth. And there's been no supply coming to the market. So slowly they've absorbed that stock. And that's why you're now starting to see the market start to move in an upward direction. And the very last one, the last leg of the table that a lot of people don't take into account is the rule of law. Now in South Africa, you know, if a tenant's not paying, I can either get the red ants, but I might as well get the red ants than go to court, because it'll take forever. If they can prove that the lady is pregnant, I'm not allowed to do anything for 9 months. Whereas in a first world country, you actually have the rule of law to protect you as a property owner. You know, in some states, and not all states, but the states that we focus on, you can actually evict someone in America in 3 to 6 weeks. So if you've got a problem with a tenant they're not paying, legally the sheriff will come. It's called a put-out crew, and they'll take the person's furniture and put it out. And you know, this is why the rule of law is so important. If you take India as an example, all the other fundamentals work. It's got low economic risk. There's getting good value on the property. There's good population growth. The supply and demand is in kilter, but there's no rule of law. And so India falls over. And just like a table, you know, if 4 legs of the table are not sturdy, then the table is not sturdy. So that gives you a risk index, and your return index is a combination of yield and growth. And this is taken on the 10-year index from The Economist. And we give a 70% weighting to income because, again, as I said, income is the most important thing, and then only a 30% to capital growth. So as you can see, Neale, and I learned a lot from, as I said, from you and also from the experts that you've shared through your magazine and through your events. But what we did is those are the fundamentals that we've used to build out the system so that we're not just basing our research and our investments on gut feel, but actually on where the numbers are telling us to invest. And what I think is really interesting is that these numbers are also fluid and dynamic. You know, just because America is a good market now doesn't mean it'll be a good market in a year or two. that's the beauty of a system. And, I always use Dr. Dolph de Roos's REAP system as an example. If you've got the right system, it can help you make the right decisions. And yet 12 months ago, the United States was 19% undervalued. So 12 months ago, was it better to invest than now? Yes, but it's still 12% undervalued, and so there's still good opportunity. Now, what I wanted to share with people, and a couple of questions have been coming through here, and I know, Neale, you've been doing this a long time. I mean, your magazine's been around since 2007, so I'm sure that you come across these questions all the time, and that's why you and I sat down to just prepare beforehand. But what I'd like to do is run through kind of 12 of the most common questions, and then if you can chip in as well and give me your thoughts. But I mean, these are the 12 questions that I'm sure you get asked as well, but we get asked all the time in terms of international investing. And as I said, if anyone is interested in anything that we're talking about or whatever, if they want more information, just type in asset manager, and one of our asset managers will be able to get back to you. So the first question that people ask us is, how do you choose the right partners? There was research that came out in 2010 that over 80% of people who invest offshore actually lose money. Now, it's pretty scary stats. And the reason that I believe that they do this is that firstly, they make crisis investments. They jump on an airplane, the rand devalues, they jump on an airplane in London in 3 days, and they try and make a good investment. It's never going to happen. If I said to you, what are the chances of a POM coming from London out to Johannesburg and buying a good investment? Well, I think they're fairly small, if we're honest. So if not impossible. But really, for us, having done this for so long, run this company for over 10 years, been to 4 different markets, we've also made a lot of mistakes. I know, Neale, you and I have shared this journey for a long time. Oh, yeah. And you've been part and witnessed the mistakes that I've even made. And unfortunately or fortunately, when you make mistakes, you learn from those mistakes, and you get to learn to ask the right questions to avoid those mistakes going forward. And that really is the ability, and Neale was 100% right. We did, in our last trip, we did 8 cities in 11 days, which is a bit ridiculous. But with our experience, our collective experience of Neale and myself and Brendan, we could go into an area. We weren't trying to understand whether the whole of Atlanta was a good market or not a good market. What we were doing was using our ability to go in and find the right partners as quickly as possible. We were actually vetting the right partners. And that's what we do to find our best of breed partners. It really is. It comes down to experience and knowing what didn't work to actually understand what does work. But the one thing that we do look for now, and again from personal experience, we found that it really works, is that it's all about actually finding partners that do everything under one roof. And what I mean by that is that, I'm sure, Neale, you've even experienced this. You buy a property from an estate agent or a developer, and they tell you, yep, you'll get 1,000 Rand a month. And then you go to the management agent, and they go, you're absolutely dreaming, dude. You'll be lucky to get 700. And the problem is, by that point, you own the property, so there's nothing you can do. So we like to work with companies where it's all under one roof, so that the left hand is helping you buy the property and the right hand is managing the property, and the left hand is accountable to the right hand. And that really is important in terms of what we do and how we do it. The second question we get a lot of... Yeah, sorry?
No, I just wanted to just add to that, because there are so many people that get the wrong partners, and when you get the wrong partner, you find them, they lead you in the wrong direction, and at the end of the day, they could be a very, very costly investment. So the right partners is a critical factor.
100%. I truly believe that, those 80% of people that actually lose money, the reason being is that they rush over there, they meet an estate agent who they've got no relationship to, and they tell them exactly what they want to hear. If they do buy a property, it's the wrong property. And if they don't buy a property, they're frustrated they didn't buy a property. And so, it all comes down to the quality of the partners in terms of where they are. And I actually put some pictures on, and I know it's actually quite funny. I didn't actually realize he was your master investor this month, Neale. But George Ross, there's a picture of him. He's Donald Trump's right-hand man. For those of you who don't know, he's actually his lawyer and confidant and his number one most respected advisor for the last 30 years. And interestingly enough, has been in the property game more than 50 years. And I got to play golf with him and share a golf cart. And, when someone's 84 years old and got that much energy, it really intrigues me. But I just loved asking him all these questions. And for me, it was fascinating learning from him and understanding where the good opportunities were and which markets we should be looking in. Neale's spoken a lot about JD Fox. I know JD Fox was actually his master investor on his last magazine. And we've actually done quite a lot with him. He's currently one of my business coaches. I know he's also coaching Neale. And he's the number one world wealth and property coach. And so for me, it's been really good because I've met some fascinating people, I've met some fascinating partners, and for me, it's really it's really useful to be coached by the best in the world. And I know that he's actually out here at the moment, isn't he, Neale? When does he get here? Tomorrow or
Yeah,
something?
he's coming. Yeah, yeah. There's an event in Cape Town, I think this weekend, and also later on during the week, and I think the following weekend in Johannesburg. So
Okay.
yeah,
Okay.
he's here. I just want
Well,
to just add one more thing there with regards to George Ross and Donald Trump. While you got their pictures up over there, it's interesting that Donald Trump doesn't take a decision, any decision on any investment without consulting George first. And George is the guy that makes the final call and says, "Don, this is the way to go." And I think that's we're talking about this partnership thing. And I mean, he recruited him in 1994 full time in the Trump organization, and for one reason only. He also advised him not to stand for president because at one stage, Donald Trump was actually going to, go for, the White House, which fortunately, business and politics don't work together. So I just wanted to just elaborate a little bit on this whole choosing the right partner thing, getting the right advice.
yeah, no, you're spot on. And I mean, interestingly enough, Warren Buffett actually has a philosophy, an investment philosophy as well, where he actually pays people to tell him why not to do a deal. So whether it's a business or a property, because his logic is no matter what investment you make, you will effectively there are problems, but you need to know what those problems are so you can make a decision as to whether you still want to make the investment. And so that's how Warren Buffett does it. Our business partner Henny actually read that, and so in Australia we set it up, and there was a guy called Mark that used to go around and kill the deals. And funny enough, when Henny came over in August last year, he met John Chin, and he said that's our guy in America that we need to do that for. And it was quite uncanny that John already had a company and a website called Deal Kill that could actually do it for us. And I don't know if you even know this, Neale. I'm not going to mention the guy's name. I'll just say Anton because you know who I'm talking about. But he's one of the most
Yeah.
respected people in the property market in South Africa. And we actually had dinner with him two weeks ago, myself and Anton and John. And he said when he was in America 2.5 years ago and he was investigating all the different people on the ground, he met John Chin and said that he was the number one person in America. So I think it's a real endorsement to John in terms of who he is and what he is. And he used to work with about 20 different companies. And then he whittled it down to just four, one out of America, one out of Israel, ourselves in South Africa, and one company out of China. And 3 months ago, he's actually come full time, only in terms of consulting to IPS and Wealth Migrate. So that's pretty cool.
Yeah. Just one last thing I want to add to that as well, Scott. Just from the the whole Trump sort of setup and everything, because I met Donald Trump in it was about September 2011 in Sydney, Australia, and one of the things that I learned from him was also he said relationships are critically important. So you talk about partnerships, but the relationship is as important as the partnership. So having trust for that person that you're working with in that partnership is more, it's deeper than that. It's a relationship that you're actually working together, and the relationships he's developed has happened over a number of years. Pretty much the relationship we have, Scott, working together going forward.
Yeah.
I think that's also a critical learning point.
You're 100% right. And I mean, funny enough, you talk about relationships. I've had the privilege of meeting Ian Scott, who's the managing partner of Grant Thornton, one of the top 5 accounting firms in the world. And, he's always been really supportive of what we're doing and how we're doing it in London, Australia, and now America. And he's actually an equity partner in Wealth Migrate. And I had a 3-hour meeting with him and Henny on Tuesday morning in terms of the tax, the structuring, and the compliance in terms of investing in America. We've now spent over 240,000 Rand understanding the right way to do it. And I'm not going to sit here and try and give people tax advice because that's not what I'm good at. But certainly for ourselves, we're working with the best in terms of finding it out. And I know, I'm not sure actually if you've met Chuck Bretz, JT's lawyer.
Yes, I have.
Yes,
I have. Yes.
A really nice guy. We've actually signed him on as our lawyer, and also Charlie, who is an accountant, and we've signed him on. And then obviously it kind of goes without saying, but we've got a number of people that can that help us find the property, renovate, manage, maintain, etc., etc. But I'm not going to go into all those details.
No, sure.
And the next question we get asked all the time. I'm conscious of time here, Neale. I'm obviously not talking fast enough.
Yes, I think we must move on a bit.
we gotta crack on. But people say, how do you get the right information? I did answer this. Basically, it's very simple. You gotta invest the time and the money. Just like Neale and I jumping on a plane in a couple of weeks at the end of the month and flying over there. That's how you do it. We spend 2.7 million rand going over, checking out the markets, investigating all the different markets. That doesn't mean we invest in all the different markets, but that's how we do it in terms of getting the right information. It's actually going there. The third question we get asked all the time is, how do you know where the right areas to invest are? An MSA is a metropolitan statistical area, and it's a place like Cape Town, Johannesburg, Pretoria. And in South Africa, we've got about 15. Well, in America, there's over 300. And so where do you get to start? If you ask someone, what's happening with the American market, and they say to you it's going up or down, that's the moment that they're talking rubbish and they don't know what they're talking about, because it's such a diverse and massive place. And the fundamentals of every market are different. Every state has different tax. There's different legislation. Some of them are tenant friendly. Some of them are landlord friendly. Some of them are better tax, etc., etc., etc. So it's important to know all these things. And I don't know if people are aware, but many of these places I've been to with Neale actually, but we've actually been to and investigated 17 different markets. And we're literally only investing at the moment in Orlando, North Dakota, Atlanta, Memphis, and Oklahoma. Now, I'm really looking forward to taking Neale there and actually showing him some of these markets, because he hasn't been to some of the other ones. And I mean, This is an example, Vegas. Like, I absolutely love Vegas. I wish we had an excuse to go to Vegas, but we just haven't been able to find partners on the ground we could trust in Vegas that provided the full solution in terms of management, maintenance, etc., etc. So really, if you want to talk to us, just type in asset manager, and we can go through all the details of why we invest in certain areas and why not other areas. But every single city on here we've been to, we spend money, we've met partners, and there's a reason why we invest there, or there's a reason why we don't invest there. And really, I would like to go through it in more detail in terms of you on an individual basis, and we can explain it. How do you know I'm getting the best deals? This is a great question. A lot of people are nervous that, they look on the internet and there's a lot of stuff. And for me, it's all about having the partners. It's all about having the relationships that Neale's mentioned. It's all about being part of the inner circle. The whole philosophy of IPS was created 10 years ago with literally, you can have anything you want in life as long as you help enough other people get what they want. It's from Zig Ziglar. And really, we're all like-minded investors. And by helping other like-minded investors, we can benefit more because we've got more collective buying power. And so really, how do you know you're getting the best deals? As I already mentioned, John's got, we basically get access to off-market deals, stuff that's not even available on the internet. And our guys buy property at prices that are well below the value in terms of where we actually are. So that helps people get really good deals in terms of what's happening. It's so far away. How do I manage the inventory? This is a great question, and I'm sure, Neale, you would agree with me on what I'm about to say here. But the entry level investor will always try and manage their property. They try and live in Cape Town, buy a house property in Cape Town, and try and manage it themselves. But once you reach some certain level of sophistication, you also hit the ceiling of complexity. And that's when you do your calculations, you include property management and a property management fee as a part of an expense of owning property, in the same way as rates and taxes or insurance. And once you do that and you know how to find yourself a good property manager, now I always say to people that's a bit of an oxymoron. Finding a good property manager is nigh on impossible, but finding a good property manager that knows about international property is even more difficult. But once you actually know how to find a good property manager, then, I lived in Johannesburg for many years and I owned quite a few properties there, and I didn't manage any of them myself. I lived in Cape Town for quite a few years and I didn't manage any of the properties myself. Because for me, it's all about having the property managers. And if you understand that principle, then you can live anywhere in the world and your property can be in Joburg, it can be in London, it can be in Sydney, it can be in Atlanta. It makes no difference. The only thing I would say to you is that from my experience, my properties in London, Australia, and America are a lot easier to manage than in South Africa for two reasons. One is that the rule of law protects me, but more importantly, the people in those countries actually respect the law and are not trying to find 100 ways to dodge the system. So there's no such thing as a housing tribunal and all the rubbish that we have to deal with here. And so a lot of the negatives that we deal with here, and a lot of the reasons people don't like residential and tend to err towards commercial, and whether it's commercial or residential, I get a lot more peace out of my properties in first world markets. So I really would advise people to actually come along on the buyer's trip and to get that and to experience it and to really understand it before one categorically just keeps all one's eggs in one basket. How do I get financing? I know that Neale got to meet Andrea. she's a really interesting person. A lot of people in South Africa, if I get a mortgage, it's all based on my income. Standard Bank checks my income, and then they send a valuer out and they look at the value of the property. It's quite an inefficient process. Whereas what they do is that their number one priority is to look at the quality of the income. And so what they mean by the quality of the income is the quality of the income on the property. They go out and they vet the property manager. So if you phone them and say, oh, I've got a property in California, and can you give me a mortgage? They say no. The reason being is that they only lend where they know the property manager and they vetted the property manager. They've done over 1,000 loans in the last 6 years, and they've never had to repossess one property, which I think is incredible in terms of what's happened with the market in the last 6 years. So how have they done that? Well, as I said to you, they focus on setting investors up for success. And how do you set an investor up for success? Well, you make sure that there's a good property manager and you make sure that the income is solid. And only then will they partner with you. It's amazing in terms of that mindset shift. It's not an income based on your income. It's an income based on the validity and the security of the income coming from the property. And that is what they lend against. And only after they've qualified the property manager do they actually look at the actual asset and the value on the asset. Now, Neale, I'm not sure if you've ever seen anything like that anywhere else in the world. I certainly haven't, but it's absolutely incredible. And really, it provides our investors with such transparency and an ability to get leverage in the American market.
Absolutely. Well, I think certainly, I think it's Andrea, yes, Andrea, I call her Vuvuzela, it's Valenzuela, isn't it? Something to that name. She's the finance expert. She's really up to speed. She's focused on investors, and I think that's what differentiates her as a financier from any other bank or any other normal financier. And I think that was the big thing that sort of, struck me. And as soon as you have somebody who understands investors, then, there's a whole different approach as opposed to just a normal bank approach where we start looking at your asset liabilities and your balance sheet first, as opposed to looking at the asset itself.
Yeah, no, it's really, hopefully one day we'll get something similar in South Africa. But interestingly enough, they help you create a credit rating. And if anyone tries to sell you or help you invest in a property in your personal name, you know that they're a thief and you know that they're being negligent. Because the only way to invest in a property in America is through an LLC, which stands for Limited Liability Company. We help you build a credit rating. And Neale, I can't wait for you to share this with us when you come over on the trip. But we're going to be shown how to create a credit rating where in less than 6 months we create a credit rating. It allows us access to invest in the American market from a traditional American bank with 4.5%. So the rate is 4.5% fixed for 20 years at an 80% loan to value.
Wow.
Now, to be honest, you don't need to have a degree in property to understand that if you've got a fixed rate for 4.5% for 20 years and you've got a net yield of 8 to 13%, it doesn't really matter what happens with the government or with quantitative easing. Can we agree?
Absolutely. Absolutely.
The next question I get all the time. Yeah.
No. I'm just saying, I'm just aware of time. I know it's 15:15. We said it goes on to 8:30. We just got to respect people's time. So it's now 2013. So I'm just bringing that to your attention.
No, all good, dude. I'll talk faster. No, it's all good. I'll run through these last few quickly. But a lot of people ask about the property, the management, the maintenance, the tax, the structuring, and the banking. Heino actually asked earlier about the property management. I think we've touched a lot on it. But really, that's all about the private banking service. As I said, if you want to just chuck in asset manager, we can explain it to you in a lot more detail. And 80% of our focus is actually on the after sale in terms of the management, the maintenance, the tax, the structuring, the banking, and everything else. If it's so good in America, why are the Americans not doing it and why are they coming to South Africa? Well, I know Neale experienced this when we were there in April. Everyone from Dolph de Roos's secretary had lost properties. And the first reason that they're not investing is because mentally they've taken an absolute smack. Their houses lost 40, 50, 60, 70% of the value. Then it got repossessed and they're just like, no, we're not interested in this asset class. And so that's the first thing. Secondly, their properties got repossessed. So for 7 years, they actually can't get credit. And thirdly, all the properties that we're buying, the really good deals are cash deals. And we generally need to put between $15,000 and $17,000 into the property to renovate them and get them back up to speed. And they just don't have that sort of cash. And so that's the kind of the smaller person. But they're sophisticated investors. I know John Chin's working with one company, a very sophisticated company, where they've actually bought 29,000 single-family homes in the last 12 months. So the sophisticated people are very much investing. I know you know about Donald Trump and Dolph DeRoos and all the other people that, even Warren Buffett, that have been saying it's been a good opportunity actually for a while. And why they're coming to South Africa? Well, they're not coming to South Africa. At the end of the day, Neale, myself, and Brendan got on an airplane and went and found them. Neale's already mentioned this. I went there in 2010. We spent 5 weeks actually looking at the market, trying to find partners that we couldn't find, couldn't trust. And we finally decided we're not investing. So we went back in 2012, as Neale said, and we went and found them. They were too busy helping other American investors and international guys to come to us. But we're very proud, both with our company and also with the professionalism of our investors, that they've given us exclusivity in South Africa. There are lots of companies that offer offshore investments, and many of my friends have lost money. How do I choose the right company? If you want to, just type in asset manager. We've actually got a report on the 6 things you need to know before you invest offshore. And again, just based on our experience, whether you use us or not doesn't bother me. But what does bother me is people losing money overseas. And so we've given you a way to be able to ask the right questions. So if you just type in there asset manager 6 things, then we'll be able to send you that report. Surely it's cheaper if I buy directly from the Americans. How do you make your money? Well, that's a great question. And it's very simple. It's very transparent. It's why we do these buyers trips. We charge a private banking fee up front, which is a small fee up front, and then we split the commission 50-50 with our partner in America. So it's a really good system because we need them and they need us. It's the commission that's paid on the property, and it's really easy for the client. And whether you use us or not actually is irrelevant because the commission is still the commission on the property. And then just to show you some stories in terms of what people have actually done in terms of the market. Gert de Pre is actually a farmer. He couldn't come all the way to America, so he gave us a mandate. And this is where we are your ears and eyes on the ground. You tell us what you're looking for. We go over and find it. We take pictures and videos and everything else. We send it back to you. And if you give us the thumbs up, we actually secure it. But I helped him buy this house when I was there in August last year. $135,000, a net rent of $1,000 a month, 9.8% net yield. That's after all expenses, pre-tax. He's had a growth of between 25 to 30% growth. The rand is devalued 23%. He's had a net income of over $12,000. He also bought another one in Orlando. It was a 1-bedroom, 1-bathroom up here, and he bought it for $57,000. The net rent he received on that property is $3,800. He's had a 17% growth, and the rand is devalued about 23%. And interestingly enough, a year later, he's been so impressed by what's happened that he just signed the form about a couple of days ago that he's going to invest another $100,000. We've got an exclusive opportunity. I can't wait to show you this, Neale, in Atlanta, where we're actually buying on a golf course, and we're buying fully serviced plots for $15,000. And to be honest, it was such a good opportunity. We're looking at a return of about 27% in 6 months. That 8 people, we just went to our current clients and the people who actually come on the buyer's trip, and they snapped that up in an afternoon. Tristan, who's a developer in the Eastern Cape, Brendan actually did a mandate for him, and he bought one property in Orlando for $69,000. He's got, again, about 9.2% net yield, 12% growth, and the rand has devalued. He also bought another one in Atlanta for $97,000. His net income's $9,500. He's had about 18% growth. The rand is devalued 23%. And interestingly enough, just recently, he got told to pay tax to the IRS because all his properties were cash and he was earning lots of income. And so he said, no, well, bugger this. He would much rather grow his portfolio. So he bought another one in Oklahoma and in Atlanta with financing so that he could offset the tax to the IRS and put it towards his portfolio growth. I'm not sure if you met Raleen Powell before, Neale, but she's actually an accountant. She came over in October with us. They bought this property here for $95,000. The projected rent was $1,050. They actually got $1,150. It's very seldom that in South Africa that it goes up, but actually in America they're quite conservative. They've had 36% growth on the property. The rand is devalued 14.9%. And this is actually a picture of Ian, her husband, who didn't come in October. He came in February, and he was so impressed by the quality of the property and the finishes and the refurbishment and the tenant that they ended up buying another 2 properties. And actually, they've immigrated to Australia in the last 3 months. And their logic is, even though they live in Australia, their money is better placed in America because it's much better return on investment. But it's also allowed them, based on their global wealth, to be able to live and have the freedom to go and live in Australia. Now, whether you love or hate Australia, that's irrelevant. It's still given them the freedom to be able to go and live there. Andrew and Damien Talene, I know that you know Andrew Talene. Neale, but they came over in October. They bought 2 properties. They've had about 30% growth. The rand has devalued, and so much so that Andrew actually resigned in May and is hopefully coming with us on the buyer's trip at the end of October in terms of his story. And then Michael and Lee Honeysett, he actually came with us in February. He bought 4 properties for $456,000. He's had a growth of about 16%, which is $72,000. The rand is devalued by 12.9%. His net income is $3,300 a month. So, I asked the question, who here would like to sit back and earn over 30,000 rand a month for not doing anything? His income is just short of $20,000, and the total return that he's made in 6 months is over R1 million, which is pretty impressive. A lot of people say to me, I can do better in South Africa. I always question people where they can make R1 million that quickly based on these numbers in 6 months, and these are actual numbers in terms of what he's done. It's about a 25% return in the last 6 months, and so much so he's invested another 400,000 in Wealth Migrate in Oak Forest, which I can't wait to show you, Neale. We're building houses for $280,000 and selling them into the local market in America for about $400,000, and then obviously the commercial office park. So really, in terms of where we are and what we're doing. And then the very last one I just wanted to share with people was Emmanuel and Kathy. They're actually based in Malaysia, and they were searching the internet, and they came across Brendan, and they bought a property sight unseen in Memphis. They bought this little property on the right, this 3-bedroom, 1-bathroom for $55,000. He was very interested in yield. He looked at all the different competitors, and he finally invested with Brendan. And they came with us in July, and they were so impressed by the property when they saw it that they bought 2 more. So, and it's quite interesting. He wants to be an affiliate, and I think he actually might be coming as well in October. So you'll get to meet him. So really, from my side, Neale, I am conscious of people's time, but I do suggest people go on YouTube and just search USA buyer's trip. Every single person that we've done a trip with, we've tried to put up there as a video, whether it's good or bad, is irrelevant. You get to actually hear about the experience. I can't tell you how great this trip is, and how much fun we have, and how you get to work with like-minded people. And certainly from my perspective, I think it's one of the greatest things that we've done. And every single buyer's trip, I really look forward to it. So go and check that out in terms of the USA buyer's trip. I will just repeat the 6 reasons I think this trip is going to be completely unique. I actually need to add a 7th one. But you've got the right information. You're going to meet the right partners. You can take action. You can have fun. You can meet and be around sophisticated investors like Henny. And as I said, Neale's actually coming as well. So you get to really, ask him a lot of questions. And then lastly, you've got Mega 8. And I just wanted to share with you some pictures, Neale, because I think, pictures speak 1,000 words. And
absolutely,
some of the trips that we've done. But I mean, this was us in February in New York. It was flipping freezing. It was minus 10 degrees. This was us in Times Square in May. And again, just being tourists. This was actually us at Neale and Dolph did a property buying trip, a property trip in October last year. And this was actually us. We were there with Dolph DeRuis at the auction, at the Phoenix auctions. And so it was very interesting seeing what was happening. This was actually where Property Wars was filmed. I'm not sure if you're aware of that, Neale.
Yes, I do. I am.
We're having lots of fun. As I say, people generally start out as clients and end as friends, but this was us and Marius going in Vegas, going in a helicopter into the Grand Canyon, having a few tots of drink or whatever it was, champagne down on the Colorado River in the Grand Canyon. This was actually a show that Dolph organized for us, which was absolutely fantastic in Vegas. And as I said, I need no excuse to go back to Vegas. And then you can see the different trips here. In October, there was a whole group of us that went, and I'm not going to go into who everyone was, but you can trust me that there were some very sophisticated people on these trips. Just as an example, Peter Jack is one of the most sophisticated construction and property people in the Western Cape. Michael is really up there in terms of what he does. We always get inside the properties. It's very important to get inside the properties and have all the facts, the numbers. You can actually see someone looking down the bottom here, looking through all the numbers so they know exactly what the insurance is, the tax, the rates, the vacancies, the management, the maintenance, and everything else. Opening the bank accounts, I always joke with people, it's easier to bloody get a gun in America than to open a bank account, but we've got the right people now to be able to help people open the bank accounts. And then, these cities are massive. You take a city like Atlanta, it's the 4th biggest city in America. And this is actually RJ doing a briefing before we go out, telling you which areas we invest, why we invest there, which areas we don't invest and why we don't. And as an example, one of our competitors there's a road there called the 285, and he helps everyone invest inside the 285. And we don't do that. RJ, the reason he doesn't do it is because it's a very spotty area. The schooling system's much lower. It's like downtown Johannesburg. No one really wants to live there. The yields might look better on paper, but unless you've got fantastic partners, you really can't take advantage of it, and it's not a good long-term investment. And so what we do is, this is RJ telling us, and we do all our investment in the bedroom communities outside the 285. And interestingly enough, when Andrea joined the team, they said they only finance properties outside the 285. So I thought it was a great endorsement for our partners on the ground. Everywhere we go, we do a dinner at night. We get the accountant, the lawyer, the management agent, the inspection agent, every single person in the process, because I don't think there's any point in going along and not meeting the entire team. We don't meet them all during the day because we don't have enough time. We're looking at properties, but in the evening, we get to meet the entire team. You get to ask the questions. And these are just some different shots of us. And then having a bit of fun on Beale Street. And I know, Neale, we had quite a good jaw on Beale Street. But it's where Elvis is from. And there's generally, depending on what night there we are, there's between 5 to 20 different live bands playing. So it's really, really good fun. This was another dinner in Atlanta. And then this was actually on the last trip. And we had a really unique bunch of people. Emmanuel and Kathy were from Malaysia. Adrian was from Canada. Clive was from Australia. Howard is a construction guy in Cape Town, and he was really valuable in terms of teaching people about the renovation and the quality. This guy here, Claudio, is actually 25 years old, and he made $25 million by the age of 19. Quite impressive. And Nick owns his own company and works with some of the biggest architects and the big property funds in South Africa. So a really unique bunch of people, and certainly people you learn from. And then I'm really looking forward to showing you this opportunity, Neale, but buying apartments, whole buildings in downtown Atlanta, which is it's in Midtown, and it's very much like buying in Sandton. So what we're doing. And then a couple of pictures here, just a bit of fun, but being tourists outside the Bull in Wall Street. And then lastly, North Dakota. Now, a lot of people, if you don't understand what's happening in North Dakota, it's the biggest geopolitical change in the world. By 2017, America will be independent of OPEC and all other oil. And by 2023, they'll be a net exporter. And there's a massive opportunity. But Henny's a very big developer, residential, commercial, and industrial at the moment in Medupi. And so he has a lot of experience in smaller towns that grow very quickly. There's also a lot of risk in those towns. And he came with us with John Chin, and we uncovered some great opportunities there, some residential opportunities with net yields of over 15% that are a lot more sustainable, and commercial opportunities, as I said. And I don't know if you know, Neale, but we'll be there over Halloween. And this was actually Halloween in New York. Okay. Will be Halloween in Atlanta. Yeah. It'll be great.
Being in the States in Halloween, it's great.
Yeah, no, it's good.
Scott, I think what you must tell people is how if people want to come on the tour, because I think that's a critical thing. I think we need to share with them, because if people do want to come on the tour that's on the webinar right now, are you gonna tell us at the end?
Yeah, no, we're pretty much there. I mean, the last thing really is just this mega partnering, which it's the number one world's networking conference. Jack Welch is the number one speaker, and Neale and myself and a couple other lucky people are going to get to spend the weekend with him. The tickets actually cost $8,000 to $50,000. As I said to you, we managed to get 10 VIP tickets for free. And so those people that join us will be able to come along to that. So to answer your question, Neale, it's very simple. This is the last slide. You need to speak to one of our asset managers. They will understand exactly what you're trying to achieve, whether you actually want to come on the trip or whether you want to give us a mandate. As I said, Neale is coming. And so there's a whole different extra level of validity where he can also be looking and giving you advice in terms of sending you the pictures. And just put your name and number in, and one of the asset managers will be able to get back to you. If you don't want to do that, you can call our office, the Joburg office or the Cape Town office. Or for some people that don't like using the telephone, so send us an email, buyerstrip@IPS Invest. And the one thing, Neale, is that unfortunately, and I'm not even sure if there are 4 spots left, because I did 2 webinars this morning and I haven't updated the slide because I haven't spoken to the office. Right. But put it this way: there's only a couple of spots left to actually come on the trip in terms of the VIP and the mega partnering and stuff as well. So it will really be on a first come, first served basis. And I can see that there's a number of people here that are saying they're interested in the buyer's trip. But please, if you are interested, just put down asset manager or buyer's trip. It really, we can get back to you. We can tell you the dates. It's basically at the end of this month. There is no cost. It's free. All that you need to do is pay for your flights and your accommodation. but one of our asset managers will take you through it. We've come up with some pretty unique ways to make sure that you can get access to the best properties when you're there. And again, if you can't make it, then we've got the solution where we can be your ears and eyes on the ground in terms of buyer's trip. I want to ask just a quick question, Neale, to see if people are still concentrating, as to where people have invested before. There's still a number of people online, and I know we're running out of time here, but where have you actually invested? Have you not invested yet? Have you invested in South Africa? Have you invested offshore but not America? Or have you actually invested in America already? It always just, it's very interesting for me to know kind of where people are from. And I meant to do this a bit earlier, but when Neale and I get started, we like to talk a lot. You should see us when we go and meet each other at the pub. But so we're trying to share as much information as possible. So okay, I can see quite a few people have answered this. So let me share those results. 40% have not invested yet, and 60% have invested in South Africa. But interesting enough, no one's invested offshore. It's quite interesting. We did a webinar with some of our IPS clients earlier, and the numbers are very different. So it's just interesting in terms of where people are. What about America? Are you actually interested in what we've been talking about America? So either yes or no, I need more information, or no, not at all. I completely understand we're not for everybody, but I think what's really important is that a lot of people hear about it for the first time and they say, yeah, it sounds too good to be true and I don't trust. The best advice I could give you is get on an airplane and come with us. Come and spend time with us, meet our partners on the ground, get the right information. I'm really, really interested as to whether people are ready or not ready or want more information, because that for us is vital in terms of giving us feedback in terms of this webinar. And if you've got any questions, please type them in. I know Neale and I will finish up now, but if you've got questions, I'm happy to answer them in terms of where you actually are. So that just gives us an idea in terms of where people are. And then the very last question that I just want to ask people is, if you were going to invest, how much money would you want to invest? Whether it's locally or offshore. Have you got nothing to invest? Have you got 0 to 300,000? To buy a 3-bedroom, 1-bathroom, single-family home would cost you about 300,000 rand. If you've got 300,000 plus, then you can buy in all the different areas in America. And if you've got 1 million rand plus, then you can really get involved in some of the bigger, sophisticated commercial projects that we're doing. So I'm just interested in what people are thinking and where they are and what their type of capital is that they would be looking to invest. But Neale, from my side, that's everything from us in terms of where we are. I'm not sure if there's anything from your side, just while people are filling in these polls. I can see that they've clearly got now want to get onto Facebook and watching TV because they're not filling in the polls. But no, it's all good.
Absolutely.
We're pretty much done. And
Scott, yeah. Yeah, Scott, no, thank you very much. I think it's been awesome. I think what it is important to say that everyone who attended the webinar will be given the free report on how to make sure you have a successful buying trip. And also there's 32 videos on how to buy offshore property as well. So if you educate yourself a little bit more information. We're all going to be running more webinars in the future as well, Scott. So I think that's also important. So if you don't make this trip, certainly there's going to be trips next year. I think you've got another 4 planned for next year. So if people can't make it right now, certainly going ahead, there are going to be trips. There's going to be more webinars as well. So it's probably worthwhile to say that. So Scott, all I can say is thank you very much. I think, I always learn every single time, even doesn't matter how many times I see the presentation, there's always little nuances, little bits and pieces that you pick up. And I think, that's so important for an investor, is to get that knowledge, to pick up that extra little bit every single time. But I think more important is to take action. And I think the start is just going on a buyer's trip like that with the caliber of people that we have on a trip, with yourself, with Henny, and in fact, meeting all the partners on the ground in the US is such an awesome experience. I mean, these are the people that are doing it, and they just rub off on you. And it just really puts you in another sort of sphere as an investor. So Scott, all I want to say is thank you very much. I think it's been pretty awesome.
No, thank you, Neale, and thank you for organising. Yeah. I just want to finish with a quick story, and I've spoken a bit about my family background. And in 2003, my uncle moved he immigrated from Zim to Brisbane, and he was his business was doing really well, so it wasn't because of business. It was actually because his son, the teacher, kept changing every term, and there were no dentists left in Harare by 2003. And so he made a decision to move to Australia. And whether you like that or not is irrelevant. Please just understand and listen to the story. He bought himself into Australia at the age of 53. So he was well beyond the age of 45 where you could get in on skills. So he just paid and bought his way in. He bought a house for $1.8 million cash. He sent his kid to the best private school in Brisbane, which is actually Churchy. And he also retired and didn't have to work for an Australian, which I think is one of the best accolades in the world. And people say, well, how did you do that? And the way that he did it was actually in 1980, at the age of 30, he opened his first offshore bank account. And when he made money, he invested some of it in offshore markets and offshore assets with offshore income. And 23 years later, that pre-planning allowed him the freedom to make whatever decisions he wanted. And I really think, I applaud Neale for putting this together, because why we are so passionate is to help people be able to make the same sort of decisions, be able to have the same sort of freedom. And if nothing else tonight, I hope that we've just sparked a bit of interest so that, like my uncle, you can go ahead and start to plan so that in the future, you've got the freedom to make whatever decisions you want. And that, for me, is the benefit of creating global wealth. So I want to thank everyone for being online tonight. It's been awesome having so many of you. I really hope that you guys join me and Neale on the buyers trip. It's a wonderful experience. I can't explain any more. And as I say, if you can't, well, I look forward to seeing you on another webinar in the future.
Absolutely. Right. Thank you very much, everybody. I hope you've enjoyed it as much as we've enjoyed it. And we hope to see you at one of our future webinars. We are going to be running this at least on a monthly basis. And also, Scott, we're also going to be doing report backs on that trip as well for those people that don't have the privilege of coming along with us. We are going to be doing, downloading videos and that kind of stuff.
Yeah, well, we'll email you the details, but watch the Facebook page. Neale, myself, and Brendan will be updating you all the way and telling you what we're finding on the ground. So, yep, thank you very much, everyone. It's been awesome, and I'll just leave it open for a little bit longer if there's any questions, but otherwise, I think that's all from Neale and I. Good night.
Great. Good night, everybody. Good night.